The moment you open your trading app and stare at a portfolio that looks like a crime scene, thousands of dollars gone, weeks of gains erased in hours, your chest feels tight, your breathing changes, your eyes lock onto the chart, desperately searching for a candle that will somehow reverse the damage. And then comes the question that quietly destroys more traders than any market crash ever could. How did this happen again? Because the truth is, most crypto traders are not losing because they picked the wrong coin. They're not losing because they lack indicators. They're not losing because they don't know support and resistance. They're losing because they're trapped inside a psychological prison that they don't even realize exists. And that hidden trap is erasing portfolios every single day. What's dangerous about this trap is that it disguises itself as intelligence. It disguises itself as confidence. It disguises itself as opportunity. But beneath the surface, it is nothing more than emotional manipulation operating at an industrial scale. Think about the last time you bought a cryptocurrency after watching it pump for 3 straight days. You probably told yourself you were following momentum. You convinced yourself this time was different. You found 10 reasons why the market would continue higher. You ignored every warning sign. Then, the second you entered, price reversed. Sounds familiar, doesn't it? Now ask yourself a harder question. Did the market suddenly decide to move against you? Or were you psychologically guided into entering exactly where larger players wanted liquidity? This is where most traders become uncomfortable, because they want to believe markets are purely technical. They want to believe every move is random. They want to believe success comes from finding the perfect indicator. But professional money understands something retail traders ignore. Markets move through human emotion. Fear, greed, hope, regret, euphoria, panic. These emotions are not side effects of price action. They are the fuel that drives price action. When whales and institutions need liquidity, they know exactly where to find it. They find it inside your emotions. When Bitcoin starts exploding upward, social media suddenly becomes a celebration. Everyone becomes a genius. Every influencer posts targets that seem impossible today, but somehow feel inevitable tomorrow. Your timeline fills with screenshots of profits. Your friends start talking about crypto again. Even people who ignored the market for months suddenly become experts. Can you feel what happens inside your mind during those moments? Your logical brain slowly goes offline. Your emotional brain takes control. You stop asking whether the trade makes sense. You start asking how much money you're missing. And that shift is where the trap closes. The hidden trap isn't the market. The hidden trap is emotional urgency, the belief that you must act right now, the belief that if you don't buy immediately, you'll miss the opportunity of a lifetime, the belief that patience is expensive while impulsiveness is profitable. Nothing destroys accounts faster than emotional urgency. Think about it. How many times have you entered a trade because you genuinely analyzed the setup? And how many times have you entered because the chart was moving too fast and you felt left behind? Those are two completely different psychological states. One is discipline. The other is fear disguised as opportunity. The market has a fascinating way of making traders feel smart right before teaching them an expensive lesson. You buy after a breakout. Price moves slightly higher. Your confidence grows. You increase position size. You imagine future profits. You mentally spend money that doesn't even exist yet. Then the market pulls back. Suddenly, you're nervous. A small loss becomes a bigger loss. A bigger loss becomes a disaster. And all because your decision was based on emotional momentum rather than objective probability. What makes this cycle even more destructive is that it creates a psychological addiction. Most traders think they're addicted to profits. They're not. They're addicted to emotional stimulation. That rush when price moves in their favor. That excitement when a position doubles. That dopamine hit from watching unrealized gains increase every minute. The brain doesn't care whether the experience is financially healthy. It only cares whether the experience is emotionally intense. And crypto markets provide more emotional intensity than almost any other financial environment on Earth. A trader can experience excitement, fear, greed, panic, hope, despair, relief, and euphoria before lunch. The nervous system becomes conditioned to volatility. That's why so many traders say they want consistency, but continuously engage in behavior that guarantees inconsistency. Because deep down, many are unconsciously chasing emotional experiences rather than financial outcomes. The market becomes a casino disguised as an investment vehicle. And once that happens, rational thinking begins to disappear. Have you ever noticed how easy it is to follow your trading plan before entering a trade? Everything looks clear. Risk management makes sense. Position sizing seems important. Patience feels logical. Then you enter the trade. Suddenly, everything changes. Now every candle feels personal. Every fluctuation feels meaningful. Every red candle feels threatening. Every green candle feels reassuring. Nothing about the market actually changed. Only your emotional attachment changed. This is one of the most expensive psychological blind spots in trading. The moment money becomes emotionally attached to your identity, your ability to make objective decisions declines dramatically. You stop managing risk. You start protecting your ego. And protecting your ego is one of the fastest ways to destroy a portfolio. Because the market does not care about your opinions. It doesn't care how much research you've done. It doesn't care how convinced you are. It doesn't care how badly you need the trade to work. Price moves according to supply, demand, liquidity, and participant behavior, not personal belief. Yet traders repeatedly fall into the same trap. They become emotionally married to positions. Instead of reacting to evidence, they defend predictions. Instead of cutting losses, they negotiate with reality. Instead of accepting mistakes, they search for confirmation. And while they're searching for reasons to stay in a bad trade, professional money is already moving on to the next opportunity. Now here's the part most people never hear. The goal of successful trading is not prediction. The goal is adaptation. The best traders in the world are not psychic. They are flexible. They understand that uncertainty is permanent. They understand that being wrong is inevitable. They understand that losses are business expenses. And because they accept uncertainty, they don't waste emotional energy fighting it. Because certainty creates blindness, and blindness creates risk. So how do you escape the trap? You stop treating trading like a prediction game. You start treating it like a probability business. You stop asking, will this trade win? You start asking, is this trade worth the risk? You stop focusing on individual outcomes. You focus on long-term processes. You stop trying to feel certain. You become comfortable feeling uncertain. Because uncertainty is not the enemy. Uncertainty is the environment. The trader who learns to function comfortably inside uncertainty gains an advantage that no indicator can provide. The next time you feel that overwhelming urge to enter a trade immediately, pause for a moment. Notice the sensation. Notice the pressure. Notice the urgency. Ask yourself a simple question. Am I responding to opportunity, or am I responding to emotion? That question alone can save you thousands of dollars. Because emotional urgency is where the trap begins, and awareness is where the escape starts. The market will continue creating fear. It will continue creating greed. It will continue manufacturing euphoria and panic, because those emotions generate liquidity. Nothing about that will change. What can change is your response. The day you stop reacting emotionally to market movement is the day you begin thinking like professional money. Not because you'll suddenly predict every move, not because you'll never take losses, but because you'll finally understand what separates consistent traders from everyone else. It isn't intelligence. It isn't luck. It isn't secret information. It's emotional mastery. And once you recognize the hidden trap, once you see how urgency, certainty, and emotional attachment have been quietly controlling your decisions, you can never look at the market the same way again.